Hey guys, Jack here. Stick around after today's episode to hear how new clients can save 50% on AgYield's full suite of consulting and technology for 2025. This exclusive offer is available now until April 1st. Don't miss out. Terms and conditions apply. Check out the video description to learn more.
Good morning, everybody. It's Thursday, January 23rd, and this is the AgYield War Room. Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here at March corn up a half at 484 3/4. March soybeans are up 2 1/4 at 1058 1/4, and March Chicago wheat was down 2 3/4 at 551 1/4. No export sales announcements here this morning, and weekly export sales are delayed one day due to Monday's Martin Luther King holiday. Good morning, guys. We were out of town there for a couple of days. Obviously, a lot going on in the market. So, Justin, maybe a few thoughts here, just post-inauguration and some of the things we've seen roll out in terms of executive orders and whatnot. But share your thoughts, and we'll throw it around the room.
Yeah, it's obviously a lot of to be determined things going on, a lot of changes, excitement, either good or bad in the industry, just a lot of unknowns on biofuel policy, and there's, a lot of money moving around, a lot of executive orders, people that didn't vote for Trump obviously kind of thinking the worst is going to happen, and vice versa if you did vote for him. So in ag, I think it's kind of split on, how people feel about it. So I think rightfully so, you could write scenarios that are, I think, pretty bullish or pretty bearish in our space. So I'm not on the, everything's going to zero camp personally. I think we might see some of these bigger projects like in biofuels, whether it's, 45Z or some SAF. I don't think he seems to be on the, subsidizing biofuels or windmills like previous administrations. So I think some of those bigger new projects that haven't happened might have, some headwinds. But what would the offsets of that be? You could write a scenario where he wants to enforce a phase 1 and phase 2 deal. He seems to be getting world leaders to, commit to big purchases or investments in the tech space. So again, just tons of money flowing and moving around these markets, trying to figure out what this all means globally and in these different sectors. So it's going to be interesting. I think it's going to be volatile. We're kind of chasing headlines right now. Either soybean oil is a good example of, just massive moves in a 3 or 4 day window, both sides, as people try to figure out what all this stuff means. Corn, I know some people are really down on ethanol. I think ethanol is a pretty mature market at this point. It's an oxygenate that we use, throughout the country, without a really good, without a competitive product. The only other one really is, considered a carcinogen, right? And it's been basically phased out over the past decade or so. So MTBE, I think it was called, which is petroleum derived, but for all intents and purposes, that ethanol is that market for oxygenate. So I don't see that being a major risk there. I think that's a pretty mature market. Now maybe you start seeing some, smaller waivers, small exemptions and stuff from refiners that if we get into really tight or negative margins that, some more of those get waived, which probably should happen in a mature market. You shouldn't really force participants to do something that's uneconomical. So that's my take on it. It's kind of tough. I'm kind of in that camp of let's wait and see here. We've had obviously some really nice rallies. We're at prices we haven't seen for a while. So market digested this huge fund buying spree that we went through. Funds are long, but basically everything except for probably wheat still at this point. Argentina looks like it's going to, stay dry here for a while, but they kind of came in with good moisture. So, I think the market did the right thing. It's off the lows. It built in some weather premium, some risk premium for a new Trump administration. And we're going into the growing season. So I'm still of the opinion that, shaking out like the corn lung, for example, is going to be tough. This doesn't seem like the type of year you'd want to just flip and have them flip and just get short. with so many unknowns in front of us. So not that they can't, take a bunch of heat on some of these newer longs and have some, nice, big breaks and corrections, which I think we will have. But to go say we're going to go make new contract lows with what we know today, I don't see that right now.
Very good. Ben, what's on your mind this morning?
Yeah, I can feel the same way. Following the report, the biggest pullback we had until yesterday was 6 cents. Yesterday, we struck a new high, finished lower, back around mid-range-ish this morning. We did see, a bigger drawback. I think outside the report day yesterday is probably one of the biggest corn ranges we've had in a long time. And I would expect that. I think we'd probably see a little bit of consolidation up here. Call it 75 to 95, maybe chop around for a little while. And I think the next question, you go to beans and think, okay, are they going to continue to build length in the face of South American harvest, or is it going to be, is there genuinely an issue down there? So those two things I think are going to be fun to watch. We had a huge range yesterday in beans from what we've been seeing lately. And I think wheat is sitting there extremely vulnerable right now with a big short and seeing the strength in corn and soybeans. And I think the shorts, again, I think they should be a little bit nervous, but we'll see how that plays out.
Yeah, just to add to that, Ben, and one thing, Dustin talked about obviously a lot is the Brazilian real. So you've seen a, nice bounce in that, at the same time that you're getting some of these phytosanitary concerns with 5 different companies, 5 of the major ag companies in Brazil, from China. And obviously, in my opinion, the $1 million question is it because they've got enough beans bought and they're looking for excuses to cancel some beans? Is it an excuse to start switching cargoes to U.S. to try to appease Trump? I mean, those are the kind of things that I think are going to be hard to answer. And China is obviously notorious for making up whatever facts they need to get out of, something they're underwater on. So
and you sold some corn yesterday, which is kind of interesting.
Yeah. So I think that's just a good example of just really hard to know, like trying to read into what that means. Obviously they've been really favoring Brazilian beans since the first trade war as just, kind of their top supplier with the money they've pumped into that country and so on and so forth. So interesting that 5 different companies, they kind of come out at the same time with these phytosanitary concerns, and maybe it is legit and it's just poor quality right now, early harvest with, kind of wet, I think, 20s moisture. So, I mean, maybe it is just bad quality beans, and it's a tough question.
Well, I think Dustin made a great point the other day. And I think it was prior to the report, and it was, the general idea is you probably don't want to be long 2 crops, right? 2 crop years worth of product. And I think you can ask the question now on further strength, where do you want to keep that balance at? And, I have thoughts on that, and would definitely want to stick to that kind of a mantra to not be long 2 crops, 24 and 25 corn and beans. So,
Yeah, I mean, I think that's a good point. I mean, with these inverses, that we do have, you look at, okay, a 1.5, 1.6, that'll move 100 or 200 million bushels on that old crop corn carryout. But what really is the job of the market going forward? I think it could switch, or maybe you'll ebb and flow towards just making sure we get enough corn acres, where the global balance sheet's getting tight enough. We got to put some, impetus on good safrinha crop and acres here in the U.S. So maybe you just start finding support out forward finally. Once you've gotten through that first wave of 600,000 contracts of buying old crop futures, obviously basis levels have kind of broken around the country to, pretty poor levels, or levels that we haven't seen in a long time in some areas in the Central Belt. So I think it proves the farmer did move a bunch of grain on this rally to offset that fun long, so kind of now what?
Yeah. So we transition, just so we got a couple minutes here. We were Justin and Dustin and Jason and myself were at a conference last week. And Dustin gave just a fantastic presentation on crop insurance and some of the things that we're looking at for this year. And I thought a really good point was made by one of the largest AIPs in the country. And it was one that kind of revolved around, this year being one of the most important years he can remember for taking a look, doing a deep dive, and not accepting status quo when making a crop insurance decision. Oftentimes what we find in the industry is guys get very comfortable with a policy that they've selected year over year. It could be a certain coverage level or certain things that they do on the farm. And he made a great point in that with some of the newer subsidies and some of the different products that are out there and the difficulty that we're seeing with margins, that taking a deep dive, understanding if you're structured properly and what those policies mean and can do for you in conjunction with different marketing ideas, that could be just a complete game changer for this year. And we've got about a week left, surprisingly, and we're going to be starting to set that spring price. So Dustin, maybe a few thoughts there, because I just thought it was a really well done presentation by you. And I just think that the narrative is really lining up well for folks to take the time and really do a deep dive. And that's something certainly that we can help you with. So don't hesitate to give us a call. But yeah, maybe a few thoughts, Dustin.
Yeah, thanks, Dan. Yeah, I think what's different this year is that we're still below cost production, at or below, depending on the grower. And, a lot of those university break-evens for corn, for example, are up in like the higher fours, like a 480, let's say. And so, the market gets up to 480. Okay, great. We can pencil a profit if we have 100% of our APH yields, right? So that's the point. Is you're really, you can still have a quick 10, 15% loss on yield if you're sold out from that price point. So how do you get there? How do you get like a good balance of that? Like, well, how can I sell it if I don't know if I'm going to grow it yet? Is do certain things to take those lower deductible policies, through things like the subsidy to try to get it reasonable enough to buy it. Try to relate that back to the individual side. Those are the things that allow us to make sure that if we don't have the bushels, we have a payment. And then in response to that, we can go do things like premium collection. Like we've been quite anti-accumulator here recently, in the last 3 months. But at some point, things like accumulators, option premium collection might be the things that are needed to do in conjunction with higher crop insurance to make this a buy year, make it a year that pencils from the beginning if we just grow, get the crop in the ground. I don't know if it's going to be a good growing season or a bad one or where prices are going to go. We just don't know what Mother Nature is going to bring for us, but we can structure ourselves with things like that. And when you get a higher subsidy, even if it's on the county-based level, you can relate that back to individual insurance and potentially buy yourself some more bushels of coverage, depending on your location. So, yeah, I think those are all good points. I did want to bring back one more point, too, for just market action. The real has been brought up. I think, a year ago today, we were a little bit less than 5 to 1, 5 real to buy $1, right? You go back 10 years, back into the, 2012 timeframe, let's say 12 years. And, you're back to like less than 2 to 1. So we've been on this path of continuing to see the real lose value to the dollar. And this is the dollar losing value to other hard assets as well, right? They've had a complete free fall of the currency. But what's different when you get periods of stability, we've been above 5 to 1 for a while. You're really, it's kind of your COVID timeframe that happened. And then, of course, we had some really big bull market runs in the U.S. post 2020, 2021 through 2022, 23 a little bit. And when we're sitting here today, we came from above 6 to 1, 6.2 to 1 in December. Now we're just falling back into the 5s, and we're feeling some of that strength. And everyone's trying to relate it to the funds and there is definitely a lot of tightness in the world that's caused this. But I do think you can attribute a small portion of that recent strength to the funds or to the real's move. And I think I'd point to yesterday as a really good example. The real was up pretty good against the dollar, and we saw a break in the spreads. The back end tried to find support, and that's where we've seen the biggest impact from the currency. So I would really keep an eye on that real. I mean, it could go right back down, take out the lows again, or we might start finding ourselves dipping down back into the fives again. And that's where I think you could maybe see some normalization at the back end of the market. You actually see a year where they start to allow corn to be penciled into a profit, beans to be penciled into a profit. I wouldn't base my entire strategy on that, but I would make sure you kind of keep that on the top of mind when you're trying to wonder why markets are moving.
Well, to Dustin, that point, I mean, so much of the hedging's done on the CME, right? Both South American and US. So as they've, taken the number one spot, and you think about how their currency moves affect US farmers and their farmers and how they affect spreads. Like, so for instance, when it became less attractive to hedge beans as a Brazilian nearby because of the currency move, we had a flat price move, which incited a bunch of US farmer selling, right? So you get like kind of almost a two-prong effect of that too. You know what I'm saying? Yeah, because you're getting, like when we were breaking months ago and their currency kept getting weaker and weaker, they kept getting higher prices. So they kept pressuring the market even on a flat price break in the US. So it does have interesting effects with spreads, especially.
Yeah, for sure.
All good points, fellas. Good to have the crew back together. Real quick, we just coming into the open, but Ryland, nearby fat cattle over $200 for the first time in history.
Yep.
And cash in the hogs is firming up. So what do you got for me this morning?
Yeah, you said it, all-time record highs in the cattle. And yeah, we passed that psychological level. So it just, at this point, we're in kind of uncharted territory. It does feel like they're just, we're getting to that level where it's like, oh man, when is this finally going to stop? But it feels pretty good right now. So overall, we got cash trade picking up here around 201, 202 in the south, 320 dressed. So, I mean, we're still waiting for that to pick up even more here. So I think there's going to be maybe a little bit of caution before this report. We'll see if the COF report really changes the overall kind of feeling on the market, but we'll see. We've got this big premium in the front end. I think there's been a little bit of cautious support here in the back end as well. So overall, things are looking really good. They're just seasonally, prices tend to kind of stay pretty firm here till mid-Feb. So I don't know if it's just going to remain on that trajectory or if we're putting the cart before the horse a little bit here. But overall, these are just great opportunities, great prices. I think people are finally starting to feel pretty good about what they're getting paid for their cattle. It's been a long time, but we're finally here. So, yeah, I mean, right now the direction's obvious where it stops and when it stops. I don't think anybody really knows, but we're still tight. And I think there were just some rumors yesterday that the U.S.-Mexico border may be a little bit slower to reopen than anticipated. So it may not be a full reopening, just a couple select regions instead of all of them. So we'll keep an eye on that. We'll update as we get more of that. But yeah, as of right now, that's still kind of on the table, and I think that's still tradable information. As far as the hogs go, yeah, we're starting to see cash start to uptick a little bit. I think just in general, that's kind of what got things whooped up. But just feels like you're kind of smack dab right where cash is. So I think the idea is what's the right basis here right now. And cutout market was a little bit weaker. So it just kind of feels like we're in it for a little bit of a mixed kind of sideways trade without some other piece of news to trade. And I think everybody's wondering what the tariffs are going to mean kind of in the longer term. So right now it just feels like we're kind of at this kind of crux, and everybody's waiting for some better directional sentiments. But the trade's still really long. Managed money was reported over 100,000 longs in the hog market. So I think that's a big risk at this time of year. It just seems like it's a little bit too soon, but we'll see. I mean, seasonally, the direction is definitely, it leans a little bit more positive for the next couple months here in the hog side of things. So we'll see if that shapes up.
Very good. Appreciate the input there, buddy. Real quick, we came into the open here. March corn up 2 1/4 now, 486.5. March soybeans are up 6 1/4 at 1062 1/4. and March Chicago wheat's down 1.5 pennies at 552.5. A couple things to note. Again, tomorrow morning, 7:30 Central, we'll have export sales. We'll talk about those in the war room. Also, favorite way to wrap up the week, be sure to tune in for Brian's Fun Fact Friday. You never know what you're going to get. So that'll be a good way to go into the weekend. And then lastly, I prefaced it a little bit earlier, but as we're coming into February and going to start really digging deeper into crop insurance, give us a call. Let us talk through everything with you. We've got a really special offer going on for new AgYield clients there, our full suite of services at a price that we generally don't offer. Jack's got a little bit more of the information in the outro, so be sure to listen to that and give us a call. We can visit about it. Appreciate everybody that tunes in on a daily basis. Go ahead and throw us a like and subscribe. Doesn't cost you anything to do so. And certainly we'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're streaming live every day that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we look forward to talking to you again tomorrow.
At AgYield, we know that farmers are constantly confronted by new challenges, and 2025 is no exception. Markets are volatile, margins are shrinking, and lender confidence is in free fall. Farmers need industry support now more than ever, which is why we are offering something truly unprecedented. From now until April 1st, new AgYield clients can access our full suite of consulting services and cutting-edge technology at 50% off. This is more than a promotion. It's our way of extending a hand of support to farmers when they need it most. From precision grain marketing to innovative risk management strategies, we're committed to protecting your farm's profitability and building a stronger, more sustainable future. And together, we can weather the storm ahead. Visit us today at agyield.com or call 855-266-6241 to get started. Terms and conditions apply. Check out the video description to learn more.